2018. But let's do one thing. Let's move on to another set of numbers now. Samvardhana Motherson reported a good set of earnings for Q3. Revenue saw healthy growth. You had the margins that are strong. Net debt is also declining. Pankaj, Mittal, the Chief Operating Officer at Samvardhana Motherson International, and Kunal Malani, the Chief Financial Officer at the company, join us now to talk about that. Gentlemen, morning to both of you. Mr. Mittal, I want to start with you. It was a very strong revenue growth of 27% that you saw in Q3, and 9 months of the year, a 27% growth as well. What do you think you can end the year with, and what is the growth forecast for FY25? You think you can do this 25 to 30% growth?
Well, Sonia, good morning, and thanks for bringing us to the studio today. As you know, we have a clear vision for 2025, and we continue to move towards that. So we all are working together with our customers. There are lots of opportunities which are there in the market, and we work together with them. So this growth has been both organic as well as inorganic, as we have already absorbed some of the mergers, the acquisitions which we had done. Few more acquisitions are in the pipeline, which needs to be merged into the company for $1 billion plus like Yachiyo and others, which we had announced earlier. So we do see a good growth coming forward while we absorb these acquisitions as well as organic growth in the emerging markets.
So you were telling us about the pending acquisitions, right? There's Yachiyo, there's Sirma Enterprises, there's the Lumen Group, ADI Group, etc. Can you tell us, when all of this comes together, when it gets merged into the entity, what will the growth be that we're looking at for the consolidated entity in FY25?
It should be somewhere between $1.1 billion to $1.2 billion additional revenue coming from these.
Okay, $1.1 to $1.2 billion of additional revenues with a lot of these acquisitions, that is Yachiyo, Sirma, Lumen, etc. I think this contribution will come in from FY25 onwards, right? So we are looking at it in FY26?
This will come in like, in the next 2 quarters, they should get absorbed. So we do expect that that should happen. So as you know, the closing sometimes takes a little time, but we do see this coming in the next financial year.
In the next financial year itself. Okay, got it. Kunal, come in on the situation right now as far as the globe is concerned. 45% of your revenues currently comes from US, Germany and China. How is the global situation at the moment, and what kind of growth do you see there?
Well, actually, there was a little bit of changed mix that we saw. If you would have seen our presentation, we spoke about the fact that somehow the mix on EVs actually went down. The mix on the premiumization also went down a little bit. But then when we dug deeper, we realized that a lot has got to do with the fact that some of the launches are yet to occur. And hence, as the launches come in, we should be able to see again the premiumization portion of the growth kicking. That's the one that actually matters from Motherson's perspective. At an aggregate level, I think we were pleasantly surprised by the resilience of the European market. The American market was impacted by the UAW strikes that occurred. Hence, our OEMs were impacted there. But right now, we see some degree of stabilization in that market as well. And Asia, especially India, continues to do well.
In your presentation, you said in your conference call, actually, that in Europe, there may be some demand softening, especially for the businesses like PKC, right? And you do have a large presence in some of these European markets. When you talk about demand softening, what are you saying? Because, yesterday we had a word with the management of Bharat Forge, and they said that forget moderation in growth, some of the export markets are even seeing degrowth, could even see degrowth in FY25. Is that something that you would concur with as well? And if yes, what would the impact be on your own business? How much could the degrowth be in Europe?
Well, actually, the degrowth that you're seeing is driven off the commercial vehicle side. I would say there's some degree of softening that we are seeing in Europe there. But on the past car, you would have seen in our presentation, it grew actually 17%, which pleasantly surprised everyone. The production levels continue to do reasonably well. Obviously, there is the overhang of all the interest rate cuts, etc., or interest rate rise, etc., that has been there. So there is a belief that there's some degree of softening that would occur, but we are still yet to see it, at least on the four-wheelers.
All right. So you're saying there's softening in the commercial vehicle side in Europe, but passenger vehicles continues to be strong. Mr. Mittal, since we're talking about Europe, right, the currency in Argentina is significantly devalued in the past few quarters on account of hyperinflation there. And there have been stringent exchange controls by regulators as well. I want to understand what could the impact of this be on your business over there?
Well, this is already factored in the results, as you would have seen in our release, that this hyperinflation has led to a situation which has impacted the business in the sense that we can't take out the money from Argentina and we have to continue supplies. So this has been taken on both sides. So the peso has changed to a dollar from 200 pesos in March to about 800 pesos so far. So this is under discussions with our customers, and while we take them into our accounts as of now, we do believe that we will be able to work it out together with our customers to find a good solution.
You have mentioned it in the press release, but you haven't mentioned an amount of what the impact would be. Can you give me that amount in the subsequent quarters, any hit that you're expecting to face on your margins, etc., because of this currency devaluation?
We can't predict as to what will be the amount in the subsequent quarters, but we do have given the amount which is there in this particular quarter. So I would, Kunal, would you like to add to this, please?
Impact has come because of the sharp depreciation of the Argentinian peso, which moved from about 200 a year back to 800 to a dollar now. And that has what has caused the revaluation of many of our assets as well as liabilities, more importantly, because we're not allowed to pay back these liabilities as per the strict control regulations there. And hence, much depends on how the currency really behaves. At the same time, these are all customer-nominated suppliers, and hence we work with the customers to find an amicable solution. We hope that sooner than later we are able to solve this along with the customer, like many other aspects in our business as well.
But I think this is, spooking the market a bit because the stock has also been under pressure and Europe is a large chunk of your business, and now we are seeing such a sharp devaluation in the currency in many of those pockets like Argentina. Do you think it will be hard for you to get to double-digit margins? Because, even in the quarter gone by, your margins have improved, but it's still at about 9.5%. Do you think double-digit margins could be far out? And if yes, what are we looking at in terms of a timeline?
Sonia, I think we've discussed many number of times. We really don't focus on margins. We focus on ROCE. On the ROCE side, if you see, we have improved from 16 to 17 if we were to consider our vision plan, and to 15% if we were to consider our reported situation. So directionally, we seem to be improving. We have continuously maintained that we will be, on a year-on-year basis, be showing continuous improvement. The integration of many of our M&A should be able to support not only growth in those respective pieces, but synergies across other lines of the business, which should then add up to what you're saying as margins. So, and growth for us. So directionally, I think we should again be on an improvement path is the way we see it. We are referring to some degree of softness, but frankly, with the slew of M&As plus the slew of newer opportunities that we are seeing in the market, I think right now we are pretty much inundated with opportunities. So
okay,
growth is not a challenge, and margin flow through.
Okay, all right. Just two quick questions from my end. Since you're talking about the slew of M&As, right? This Lumen acquisition that you've done, and a large part of their business is in the wiring harness space, which is growing quite a bit. Mr. Mittal, I want to understand from the Lumen acquisition, what could the contribution be to your own business? And the other part of my question is on the debt. Debt has gone down. Is there scope to decrease it further?
Well, Lumen acquisition will add, about 100 million plus of Aussie dollars of business. And it's a very interesting business because this brings us to support the Aussie market, where the OEMs had stopped manufacturing, but it remains a big consumer, and there are a lot of fitments which are being done. So this company works together with the OEMs to make those vehicles for the Aussie vehicles, to tweak them. And this is very interesting. And then they're moving into other markets as well. Coming to the debt reduction, yes, we have a clear direction that we would like to continue to work while we have invested more and more into the acquisitions. Also, you have seen that our leverage ratios have come down, and we work towards that to reduce the leverage ratio, to improve upon our working capital, as you would have seen from our presentation, that how we are improving on our working capital as well. So inventory reductions, optimization at all places. And the board really commended all the teams across the world for working in this direction and for the outstanding results in this quarter.
All right, we will leave it at that. Thank you so much, Mr. Mittal as well as Kunal, for joining us and explaining the business as well as the way forward. That's Samvardhana Motherson. The stock is down about 3% because some of its businesses in Europe are facing a lot of pressure. There's a massive currency devaluation that you're seeing in Argentina. For example, you know, in March of 2023, the Argentinian peso was 209 to the dollar. By December, it went to 800 to the dollar. And that devaluation has really hit some of these companies that have businesses there. So I guess that's the reason the stock is also under pressure.
Valid